questions yesterday with people asking me to do a video on risk management, and I thought, in fact, there's never been a better time to actually focus on risk management. So this is a time where a lot of new traders are now coming into the market. Some will have obviously invested in their education first, some wouldn't have. I'm just going to go over risk management, which I believe is one of the most important, or if not the most important aspect of your trading journey. Basically, without risk management, you will not go very far. And when it comes to risk management, it's not just about, obviously the standard, you risk 1 to 3% per trade. Well, if you didn't know that, now you do. So not just that stuff, but it's also about your risk to reward on each trade. When you're placing your trades, you have to ask yourself, what is the risk to reward? Is this trade actually worth taking? So the example that I always give my students when we have our in-house classes is, if I was to, I don't know, have a bet with you, and I said to you, we'll have a race. We'll race, I don't know, 2 miles. We'll have a 2 mile race. If I win the 2 mile race, you have to give me £10. However, if you win the 2 mile race, I have to give you £5. Now, immediately in that scenario, you're going to say to yourself, well, that's not fair, right? That's not fair. It should be at least 10 to 10, right? £10. If I win £10, you get £10, etc. It should be even. Now, it's funny because when it comes to the market, people don't think like that, right? People don't value their money as much as they do in real life, which is quite odd, right? So, for example, you're not going to take a trade to risk, I don't know. So a lot of traders are not trading without stop loss. So initially, what they're looking to do, let's say they're looking to capture around 50 pips, but they're risking their whole account to gain 50 pips. It doesn't make any sense whatsoever. So let me just get into risk to reward, for example. So we've got a trade on AUD JPY that we took this morning. We're currently in profit on this trade. The risk to reward is 1 to 2. So we're risking 50 pips, or just over 50 pips, to gain just over 100 pips. And of course, we're going to look to trail this trade, which means that obviously the risk to reward profile will increase as that trailing stop is employed. But that's an example of basic risk management. I'll go into another trade. For example, Euro USD. We had a perfect sell setup on this trade, risking only 43 pips, and our stop loss, our take profit, is 140 pips. We're currently up around 90 pips on this trade. So already we've gone past the 1 to 2 mark, and this is looking like a 1 to 4, basically a 1 to 4 trade, which is absolutely incredible. And what that means is, let's say I lose this trade, right? So I've lost this trade, I lost 40 pips. In fact, let's say I lose this trade 4 times. I only have to be right, 1 to 3. I only have to be right 3 times in order to actually to succeed, right? Which is great. So it means out of 3 losses, I only have to be right once, which is how you want to be trading. You want to be trading where you're not required to win every single trade, or you're required to be right every single trade. So that's why a lot of professionals say they don't really care about their overall success rate. They care about their risk to reward profile. How profitable are you? You can have a trader that wins, that tells you he has a 90% success rate, but on that one trade at the end, that 10%, he blows his whole account, which he's not telling you. So it's important, guys, to make sure you do have a solid risk to reward profile. And this is very brief. I'm obviously going to do a full breakdown on this, and I'm going to show you live examples of how this all works. But yeah, if you enjoyed this video, don't forget to share. But yeah, remember, guys, risk to reward, of course, 1 to 3% on every trade, but it's also about the kind of trades you are taking, right? And your risk to reward, overall risk to reward, will actually stop you from taking bad trades, because you're going to find that they don't make sense long term, right? So if you're looking to, I don't know, sell at a key support level or buy at a resistance, if you're, let's say, when you do your risk to reward and it works out to be below 1 to 2 or 1 to 1, you're going to find, yeah, it could work out, but the trade is not worth it.